Hello.
Well, hello there, Steve. What's going on, Scott? Hello, everybody in attendance. Happy Monday. And here we are, 1 week down in October already. Today's October 8th, and welcome to another edition of the Office Hours. So before we get into the meat of the presentation here, I just want to take a quick moment to take care of the legalese. I just want to make sure everybody is aware of the fact that we present all of this information to you, whether it's this webinar or any of the other ones that we host throughout the week for informational or educational purposes only. So if you do need investment advice, please seek out a registered investment advisor or some other licensed individual like a Series 7 broker that can help you out with that type of stuff. But everything here is for educational purposes only. All right, and for the new people, for you regulars, thanks for being patient here, but there's always a nice little grouping of new people that might be in here for the first time, kicking the tires, seeing what's going on with trade ideas, and just want to make them aware of the fact that not only do we have the one-of-a-kind award-winning technology that just keeps on getting better, but we've built quite the community around that technology, and people have been responding well to this environment that we've created because we don't leave you out there hanging in the wind. We do support the product. We used to give the one-on-ones to everybody, but got a good problem. We just got so many clients now that we just don't necessarily have all the manpower and to get everybody taken care of with a one-on-one. So we've created a great series of webinars. Now what you're seeing on this slide are the 5 p.m. Eastern webinars that occur Monday through Thursday, with the exception of the support webinar. So obviously you got myself and Steve today, but let's not forget the topic up to the upper left here, the very first one, the live trading room hosted by Barry Anderson. Barry opens up the room 30 minutes before the open every day. And depending on the day and how busy the market is, could have 400, 500, 600 people in there on any given day. And he does a fantastic job of not only showcasing the technology and the way that he uses it, but how he applies that to trades in real time. So it's a great place to learn, not only about the technology, but a little bit about trading as well. Watching Barry does a great job at moderating that large number of people. The next best thing other than Barry about the room is the price, $0, 0 cents. If you've shopped around trading rooms, you know that most of them will charge a pretty penny, $100, $200, but not the case here. It's a free perk when you're part of the TI family. Of course, you get myself and Steve today on Monday. Steve's going to take the helm tomorrow for Tuesday's Trade of the Week. Andy Linloff rides shotgun with Steve on Tuesdays. Middle of the week rolls around and we like to bring in somebody completely different. Dan Merkin, the founder and CEO of Trade Ideas, runs the show on Wednesdays, along with our Chief Technical Officer, Brad Williams, always entertaining there. On the 5 o'clock webinars, Andy rounds it out on Thursday with the Trading Studio, and I ride shotgun with him. Now on Fridays, we change it up, do something a little bit different. We call it the Support Webinar. We crank it up at 11 a.m. Eastern, and assuming the house is packed, which it has been and has been getting more and more packed every Friday, we allocate 3 hours for this webinar on Fridays. And assuming the whole crew is in the house and nobody's off traveling, you get myself, Steve, Andy, and Sean McLaughlin in there, all putting our heads together to answer your questions. So come one, come all, Friday support sessions. In addition, to replace those one-on-ones that we no longer can do simply to the sheer size of our client base, we've got TI Universities, TI University, but 4 webinars throughout the week, Monday through Thursday, Monday 101, Tuesday 201, Thursday or Wednesday with 301, and Wednesday with 301, and the one I teach on Thursdays, 401 advanced. We do recommend that you take these in order. That way you're prepared for the next level of content. So between these 4 and our other 5, we've got 9 webinars coming at you each and every week. So good idea to take advantage of all of those resources. Okay, onward through the fog. Always like to show how well our AI is being received. And boy, do we have some AI stuff to talk about today, because some long-awaited feature enhancements are now being tested by myself and Steve and a handful of other people. Don't know if it's in the beta just yet, but if it's not, it'll be there quickly. But what you're seeing right here is the introduction of the first AI module, the Holy Grail our client base since the introduction of Ollie, and the fact that we've brought 2 additional AI modules online as well. So good stuff, more to come as the year draws to a close. Even more good stuff, more exciting stuff coming from the AI project. All right, so the time has come, Steve, to take a look at the big indexes or the tracking ETFs, because we've had quite an interesting start to October.
Yeah. Unmute. All right. So.
And there you have it.
Do I? Let me see.
I think I might have hit
I grabbed it. I got it.
Okay.
All right, there we go. And yes, Peter, Mike, Christopher. I'm not going to steal Jamie's thunder, but there it is. There's the main AI window and the end of the day on the 3 Holly 2.0, Holly Neo, and Holly regular, all separate, and it was fun to watch them all fill in today. But again, I'll let Jamie do some more explaining there. My job is to talk about the market and what happened in the last week, and a lot of the regulars tuned in, I think, with Andy and myself last Tuesday, and started to throw up a little bit of cautionary comments, primarily because of how horrible the IWM had been looking, and also we talked about a lot of decay and breakdowns of individual bigger names outside of the indexes. So nonetheless, we have had a nice, decent 3 to 4% pullback, and these are very healthy. So we had 3 solid days, as you can see, by the increased volume. A lot of distribution, a lot of people getting out of stocks for the last 3 days. But the important thing is, especially after today, we dug in and closed higher than we opened with a long tail, which is interesting. The last 3 days, we've had the same kind of action. Heavy volume to the downside, most of the selling in the first half of the day, with the buying coming in at the close. And, you know, this is really honestly typical for what you would expect in a juggernaut bull market like this. It's been just running away with, you know, dip after dip being bought. The conditioning, the mental conditioning is there. And what I mean by that is that at that end of day buying, people are buying the dip. They bought the dip Thursday, and they bought it Friday, and they bought it again today. But we're still pretty much lower. I mean, yeah, it's a green candle, but essentially the SPY was negative 0.02 cents, unchanged in the SPY, even though there's a healthy little green candle. And additionally, I also pointed out the blue 20-period moving average was important to hold. Well, we held that Friday, and believe it or not, we actually held it today. We were way below it on the early session, but the closing price did recapture that rising 20-day moving average. So if the bulls are going to do any damage, or I shouldn't say damage, if the bulls are going to continue to do what they've been doing, tomorrow is the time to do it. And turnaround Tuesday, they don't call it turnaround Tuesday for nothing. We'll see if that happens, but a breakout of today's high candle and move higher and close above, that would be the first sign that what we just saw was just a nice high volume pullback, and it was in fact to buy the dip. In addition to the blue ascending moving average there, I also put in this orange line, this line of resistance back here. It was resistance and then congestion, and then a little bit of close to support there, and definitely support on Friday. The bottom end of that bottoming wick bounced at that orange line on Friday. We tested it today, but did recapture that orange line as well. So that pivot line kept us out of the rung of the no man's land of the level of which we came out of. We want to keep moving higher, new levels. We want to keep drawing new orange lines. But along the way, yeah, we're going to have 3 steps forward and 2 steps back. And that might have been what we just had. You know, we'll see. That was a decent close today. Again, it was a net unchanged, but, you know, the candles are there and the closing prices are still above some key levels. Again, if the bulls want to take control, tomorrow is going to be the day to do that. Over in NASDAQ land, same situation, 3 heavy days of selling. Look at that, it's triple the amount of normal selling in the NASDAQ. And honestly, this is where most of the damage was done. So, you know, this is probably a 4 to 5% pullback in the NASDAQ. I haven't looked at the numbers. But again, strong selling in the morning, and then the bottoming tail of the wick is each afternoon. It's just, that's where we closed, buying the dips. So the condition mentality is there to come in and buy those dips. They lost the 50-day moving average, which I said was important, as we look back here and along the last month. That was an important line. Well, we gave that away on Friday, and we gave more of it away today, but the bounce back significantly basically comes back into the prior rung of the trading range. So that orange line below back here was resistance, and then support, congestion. So that's my interpretation of the area of pivot that we're going to watch now, and we did close above that. So that's good. But same thing tomorrow, bulls are going to have to dig in to consider this just a normal, healthy pullback. And when we pull back like this, you know, in the scheme of things, yeah, this probably felt pretty scary back here 2 days, but buyers step back in. Is that going to happen again here? We will see. When we look at that volume, though, those spikes are pretty incredible. We never really know if we can call it distribution until it's too late. And 10% lower, we look back and go, oh yeah, those down days were distribution. We're going up on low volume days, but boy, were the institutions slinging it like crazy on those down days with high volume, lightening up and changing their balance sheets. So the Qs, again, decent pullback. We'll see if it holds. Now, what's interesting is the Dow. I'll save the IWM for last. The Dow really did kind of hold its important levels of pivot levels back here being resistance. We took out those lows from 2 weeks ago and held. Even closed in the positive. So the Dow is holding on. It's holding on okay. It was lackluster before, but now that the NASDAQ is getting slapped around, Dow's kind of jumping in there and hanging out. And then lastly, the IWM, the Russell 2000, the small cap stocks. This was where we started noticing the bleeding happening back here in the last 2 weeks. And we thought, well, is that going to foreshadow weakness in the other indexes? And well, it sure enough did, but where do we go from here? That's the interesting stuff. One thing that I did notice, if we look back on the left side of the chart here, we did bounce off this 200-day. This is the last backstop I have on my daily charts of moving averages on the daily time frame. And it's interesting to note that the IWM did, in fact, hold its 200-day moving average back here in April. It's been a long time since then, but as we've broken down through all the others, it seems like not only is that 200-day moving average holding, but also a pivot line that I've drawn back from here, resistance, support, simple. You can see that within 2 weeks, resistance became support right back here. So that line is still significant. And technically, that's pretty much where the bottom of today's low and Friday's low are on these two last bottoming tail wicks. The 200-day moving average really only serves as a reference of a closing point reference. So good things could be in store for the IWM if they can just hold on here and build off that candle tomorrow and move higher. Then we will know that this pivot level in orange and the rising 200-day moving average is probably holding. So again, I can see Christopher's getting really excited. He wants to talk about Holly in the new segment, so I better not hold him back any farther, Jamie.
Should we hold Holly for last? And
I'm going to leave that up to you. I did my part.
No. There's a lot of, not only are there good, risk-on opportunities that we will showcase, but oh yeah, it's time to get busy and show everybody the new stuff that just got delivered to us in this latest developers build. So let me grab the screen here. Just let me know when you have eyes back on.
Okay, let me see it.
And Marguerite, that's okay. We'll forgive you for being late.
There's a recording. You can catch my awesomeness on the recording.
You'll issue a tardy slip. No, you can only get 3 of those before you get penalized. But no worries. Glad you could make it. So let's get on with the show here. As always, I like to kind of give a little, peek at my expectations, kind of the way the market unfolded in real time after the first 15 minutes or so, using my favorite compare count window, because man, this one, my big cap 4 billion and over on the market cap, man, it's been on it's been very accurate, so to speak, the past couple of weeks. Not 100%, but hey, what is 100%? But as far as what we could perceive as a leading indicator, a little bird going, psst, psst, hey, keep an eye out for this type of downside or upside move. Been doing a very nice job as of late. So this is the peak that I got after the first 15 minutes today. 53% to the downside. So not the most smashing bias, but to the downside nonetheless. Didn't quite get above 55%, but boy. We know what the markets did after that first 15 minutes. If we just take a peek here at the SPY, let me put this back on 15. Was looking at the smaller stuff on the 5s. And we can see today's action. After the first 15, we ground up to, yesterday's closing price, a little bit past it, and then whoosh, bottom fell out. Here's where we put in the bottom, obviously. So not immediate, but didn't take too long before that undertow kicked in, and we had some nice downside action. And of course, what I'm going to do here real quick, watch what I do, ladies and gentlemen. I've got my default layout currently open, but check out what we got over here. We now have the Omni AI channel. So I just activated that, and here you go. All of the Holly modules. I think Brad retooled this just since the last time that I looked at it because it looks different.
Did it used to be the individual trade windows?
Well, these were bigger, but notice these are the strategy panel. Okay, there they go. They're populated. So it looks even different than it did this morning. So obviously Brad's had his sleeves rolled up, getting in there and improving upon the layout. But what you're seeing here are all of the Holly modules. The names are kind of crimped up here, but if we do expand these out, well, let's see here. So we got Grail here. And of course, we could also see from the trades blotter, Holly 2.0, Holly 2.0, and of course the big winner, or what has really been the king as of late, Holly Neo, just going crazy today. Look at that equity curve. I mean, wow, whoosh, just straight up and then tabletopping. These guys kicking out what we typically see more of a what I call a regular start to the session, where you get a little drawdown and before you catch the green. Here we stayed green, went a little underwater, and then boom, came back up to that break-even mark and went on to higher highs, probably because the market turned, which, what a day for trading, Steve, because, when we look at the smaller time frame today, spooey, that ain't gonna get the job done. Okay, I mean, what a nice range. Short sellers had their fun, then it was time for the long people to have their fun. The interesting thing is that the big winner on profit was the Neo module on risk off, not risk on, risk off today, which, for a while there it was risk on, got up to like 7 and change, I think. But to see the market turn like that and to see this guy win the day on risk off, I like that a lot. Because let's see here, what I'm going to do here. And by the way, ladies and gentlemen, I just wanted to take the opportunity to show everybody we got the new channel. So just click on it. You can take these guys, move them around, adapt them to your own liking. When we talk about stuff, since I've already got my default trade blotter window established, if I do want to look at things the way I'm used to looking at them, and you guys are included, we just come down here and say show. Well, when we're in that panel, it won't let us. We have to get here, view all trades. Now things come out the way I like them, right? Here's my blotter. I've got all my columns positioned the way I like to. So we can use what's there, or we can easily right-click and view that all trades blotter from any of the modules. So what I'm going to do now is click back into my default layout. We're going to take a look at some of this risk-on opportunity that was laid out before us today by all of the AIs here. So let me get my cheat sheet back up here. Just make sure I'm looking at the right stuff. Okay, so we'll take a look at Holly Neo here. Plenty of examples. Then we'll take a look at Holly 2.0. We can see Holly Grail, the original, didn't do too bad, but 9 trades up 64 cents, nothing to write home about. Clearly, this guy was where all the action was at. And I think I calculated already between the 3 AIs up around right at $9.27 as a point total, or we could just say 9.27 points on 52 signals there. Yeah, 52 signals. But when we add up all of the gross profits and divide by the number of transactions, we get a very healthy 18 cents a share, which that's pretty huge from a per share basis. 18 cents a share, so back out slippage, commission, and the goal is always to have some of that left over for us to enjoy. And with that type of per share average, should have been plenty to go around. So now let's take a look at Neo's Blotter. Here we have it pulled up. Probably got to expand it out just so we can see everything. Nice distribution. We've got our losers, right? But then we've got more winners than losers, and the profits are a lot bigger than the losers. So let's take a look at risk on, which is what we're sorting by currently. And this one sticks out like the biggest one today. So let's take a look at why the spread is so large between ALV, risk off profit of 0, and $1.26. Now, before we do this though, for a large portion of the day, it was the shorts that were leading the pack here, right? And we can see risk off 81 cents, or excuse me, 79 cents versus 72 on that closed short, $1.57 versus 71. So an excellent job at closing out all those shorts with these timed exits. Even the profit save, a lot of the times profit save and reduce risk is Holly making an exit that's not so timely, and then we can look at the charts and see if we feel comfortable taking that additional risk. But boy, she was pegging them like clockwork today on risk off as far as the shorts go. And that's good because, as we saw earlier, boom, if you tried to hold those shorts for risk on today, boom, everything kind of regressed back up to the top and those gains diminished. But man, usually you don't see flat out zeros. Usually it's maybe losing a few pennies, making a few pennies, but 2 in a row right here from 2 different strategies. ALV, nice entry line right here at 82.10 off of the strategy. What was that? The breakout, right? So nice entry right here, pretty much a pain-free trade, stop loss being way down here. And then of course, Holly getting out on the, looks like just pretty much the worst wick that she could right there. So we're in the money, all this little level right here, kind of gravitating back down to the entry level. Holly closes the trade. Why? Because it's going sideways on her, right? And once again, to refresh everybody's memory, in essence, the only reason profit save and reduce risk are part of the equation is because you have to give the AI the ability to not let a winner turn into a loser. That's bad for business, right? Up 50 cents, next thing you know, she's closing out the trade down a quarter. That's too big of a vacillation from 50 cents to down 25. That's a 75-cent spin. Of course, once we launched the AI back in 2016, we quickly realized that, well, you know, we got to fix that. So keep that in mind. Now, profit save and reduce risk are in essence a form of trailing time decay type stop, where if the position isn't accelerating in the direction that we want it to in a timely enough fashion, she's got the ability to pull the plug. So simply put, you got the profit save here, turns out to be a flat, but you, me, we spend our day looking at charts. So when we see Holly exiting here, we can go, well, it's just kind of towing the line above the entry line. You know, if it was below the entry line, maybe exercise a little additional caution depending on how close it's gotten to the stop loss. But man, towing the line above the entry signal. So going risk on here is simply asking yourself this: do I feel comfortable staying in this position? Do I feel comfortable giving it some time to work? Answer is yes. Then we can adjust our stop loss to right under the break-even spot, or we can stick to our original hard stop. It's really just up to you and your risk tolerances. So in this case, had we decided to go risk on, we would have been rewarded to the tune of a whole point plus another quarter, about $1.26 here left on the table. So what I like about this chart as well is it gives us an opportunity to bolster a position that's working, right? So of course, let's do the 50-50 rule, which is an easy way to try to train yourself to get used to going risk off, risk on. Maybe you do half the whole 50-50. Okay, it's not working. I'll flat half of it with Holly, but I'm going to keep the other half, maybe set my stop loss to just below break even or stick to my hard stop, and you would have been handsomely rewarded on this one. On top of that, as this little consolidation is forming here, and we can use the candle bodies in this case, or if we really want it to play by the rules, use that wick as the true high of the day. Look what happens here. We're already in it from Holly. it starts to work, starts to get more traction, boom, it breaks that range and kicks higher. So it did throw a little wiggle here. Looks, which one of these things is not like the other? Certainly that little candle there, but still nothing too severe. So this would have been a nice little place to maybe add to the pot here and get the remainder of that that move that took place. They don't all look like this, but sometimes they do, and when they do, the more times you see this pattern line up, then the more apt you'll be to take advantage of it. All right, just keeping an eye on the questions panel here. Looks like Steve is knocking them out as they come in. So let's take a look at this one. Another zero from a completely different strategy, pushing through resistance here. Came into the session 67.6%. Only hit 1 out of 3 in risk-off mode today, but let's take a look here. Now this one, not like this one at all, right? RJF, on this one, had we stayed in at this level right here, now number one, don't know if I would have felt real comfortable staying in this one. Let's look at max profit right here. Where is my max profit? It seems that somehow my max profit column disappeared. Oh well, no biggie. The bottom line is this. Once we get this push into profitability, well, there's always the urge to take profits here, but of course, the longer we stay in something that's working, the better off it is. But in this one, we had a pretty severe pullback, and Holly once again closes the trade on a profit save, if you can call a flat a profit. So once again, not the timeliest exit here. And then of course, had she not closed it out, then boom, we would have been stopped out here. So this is one that, a lot of the times these patterns just jump out at you, on the little consolidations, the sideways movement. But on this one, clearly not something that would have been real appealing to hold on risk on mode. Now, having said that, it did act, interestingly enough, accordingly, I should say, around these stop areas that often act as pivots. Once the stop out occurred, a lot of the times, since Holly is spitting out a lot of trades here, especially now, even though you can view all 3 modules at the same time, it's still going to be virtually impossible to interact with every trade unless you're just like some super type of Rain Man, just all over the place. Now, when automation comes onto the scene, latter part of this year, that's going to be different. But right now, the only way we have to execute is manually or through the brokerage plus single, right-click to trade mechanism. But we always like to point out here, say you finish your opening busy time, whatever that is for you, first hour and a half, finally get a chance to slow down, you got all your stops in place, you've peeled off all your winners and losers, and you're sitting with what you want to let mature. Then it's time to play. Okay, well, I see Holly has been stopped out of something. Now, where is it in relation to the stop price? Because if the timing is right and you see Holly getting stopped out and down here below the stop area, a lot of the times these stop areas can be good entry signals, right? So when you see it down here, you don't have to sit here and bird dog it the whole time. You just walk up here, walk your mouse up here, set that price alert. That way when it does get back up there and it pushes through, you get that price alert and you can size it up and see if you want to take that trade. So just another way to perceive entry signals through Holly is when you look over and you see her trading below the stop price, which, Steve, remember, follow the blue rabbit. Remember when we were saying that all the time?
All right.
Let's see here. Last price is what I think that was. And let me just see if I can see that here because...
Yes, it's last price on my screen.
Yep. Last price will typically show you the ones underwater, right? And was that a short? Yep. Okay. So you see how on this short here on THC that I just clicked on from downward momentum, way above the stop price. Therefore, last price is going to be reflecting red, right? So you can use this column to zero in on all of those guys that are trading below the stop when you're ready to do that. Last price is a very good mechanism to do that. And of course, the blue ones are going to be ones that are still in the money, right? So depending on what you're looking for, follow the blue rabbit for pullbacks perhaps, or nice support and resistance areas, or support I should say for the longs. Follow the red rabbit for things that are trading below stop losses that, you know, might be conducive once they get up back through those levels. So hopefully that makes sense. If I need to clarify, just let me know. So a great example here of one that's easy even for the novice to kind of try to stay in, risk on, versus RJF, which was just kind of a mess. Once Holly took the early exit, she saved herself a little dough on risk off, but it would have been interesting to be alerted to it at this level here because it did get a nice push. All right, let me see if anything else stands out right here. Now, of course, you can see not any risk on the shorts because she just happened to time it pretty dang well today, flipping from shorts to longs. And then it's kind of funny to see, plucked it all, played it like a banjo right here, but some of the bigger winners in risk on ended up being the longs because of the bounce that we had towards the end of the day. So let's see here. Let's take a look at JKS. Once again, one of those where if you pulled it up after the stop had occurred, you would have seen the red in the last price, and we could have easily, you know, maybe you're a scalper. Maybe you played it through here, coming back through there and got some of this, waited for it to come back down, took even a bigger plunge back down, lining up with these little guys right here. And of course, when you're trying to use this type of technique, it's always kind of handy to look at the daily because I'm telling you, this doesn't make me feel too comfortable, right? When you're trying to figure out which ones to use that stop as a pivot. When I see things like this, I'm like, maybe not, because look what we're seeing here. JKS is what we call abyss bound, right? I'm looking, I'm squishing. See, we got support maybe way back here, and of course our charts you can't even compress enough to get over there, but it doesn't look too comforting, right? So keep that in mind as you're perusing these signals that Holly has spit out. Maybe you're thinking about playing them off these pivots or the stops. Take a look at where they are on the daily. You know, if we were bouncing, you know, butting up against this level here on some of these days, that makes you feel nice and fuzzy. But when we see these little drop-offs and nothing identifiable as far as, you know, some nice cozy short-term support, might make you think twice about that. All right, so I don't really see any other good trade around, so to speak. This guy, maybe MYE could have been one on the 5-day bounce here. Didn't ever get a stop out, but we got pretty darn close here. But when you see something like this as well, you know, maybe you didn't stumble across MYE until later in the day and you're like, hey, look at this nice little layer of support that it's set up here. So, you know, everything's dictated by that risk that where's my markup? There it is. Maybe you stumble across this one later in the day and you see this nice little consolidation right here and you're like, hey, I can get long here, put my stop right outside of that wick right there, and maybe I can stay in it. In this case, we did get a gravitation back up to the entry signal from that stop area. All right, Mike. I don't know if I missed the Star Trek reference there, but I am a Trekkie, always have been. Not so much the newer stuff, but you know, the old stuff, and even Next Generation was pretty cool. So let's go on and take a look at 2.0 as well, because not near the star that Neo was today. I'm sure Michael Noss is really happy about that because once again, Neo is his baby. Kudos to Michael. Another day of basking in glory.
I think he disconnected. I think he's on an island somewhere.
Yeah, I think it was a thing called, I haven't been on one of these things in so long, but I think it's what they call a vacation.
Yeah, he actually got out and went somewhere and disconnected.
And more power to him. Okay.
Exactly. Yep, he's celebrating Canadian Thanksgiving. Hey.
Hey, all right. 2.0. 2.0 did have a pretty packed blotter today. Look what we got right here. Another zero out on the profit save. And this one, well, it would have been a little harrowing because, having to sit these wiggles as the market does its thing. But if you're a person that sticks to the hard stops, and by the way, this is something that comes up all the time, these are the stops. These are the hard stops. Now, sometimes Holly's going to exit a little early, and sometimes if we stick to these stops, we're rewarded. Sometimes we take a little bit of extra risk, and it gets us. But the name of the game is ensuring that the trade is profitable. So once again, a little push. As soon as we get into it, hey, we're winning. Pull back. We're back down to flat. Break even a little bit, but not down to the stop area. So a couple of different times for exiting with a profit here on these first two pop-ups. And then, boy, it really did tempt fate as it scurried along the stop area here. But hey, once again, no stop hit. So there's so many different ways that this trade could have been handled based on your trader mentality. Props to Trader Mentality on Twitter. That was an unintended plug. But if you don't follow Trader Mentality, I want to check him out. He's a pretty solid dude. So profit potential in both of these little upswings. However, let's pretend for a moment we just stayed with what we had. Once Holly got out here, I don't know. This is, I know Barry probably would have been out for some right here, maybe keeping the rest. And, not a bad habit to get into because we all like that immediate gratification. But the bottom line is this. We see Holly getting back out for the flat. Maybe we took some off here. Maybe we took off some for the flat with Holly. Maybe we're playing the 50-50 game, trying to get used to the way that these things work. In any case, we didn't get stopped out. We were able to enjoy this big run here, or at least take out some of it. We're never going to get all of it. Can't say that. You will sometimes. It'll be the exception, not the norm. Sometimes you'll cover a short at the bottom. Sometimes you'll get out of a long at the top. It's always great when that happens. But once again, this little guy right here, because of this docile activity later on in the day, once you're able to identify these little micro consolidations, if I had to pick an alert that would have flagged this area right here, NR7 comes to the top of my mind. What I've been doing here lately is I've got an NR7 alert window, and every Holly play that comes through there, I'll tag it up, throw it in that list, so that when some of these Holly plays start doing this, I get alerted additionally to them in case I'm not paying attention. Not a bad idea. I highly recommend it. So once again, whether we got out of all of it with Holly or whether we peeled out a half and keeping the other half for risk on, this presents an awesome time to add to the position. It tempted the stop loss for a long time, didn't quite get it. Boom, we get this little break out of this area right here, and caught that little upturn in the market, and boy, the biggest move of the day. And you could have leveraged that position with very little risk down here. Well, Bill, there's a thing called Barry's Trading Room. That's typically what that is designed for. Now, of course, we're looking at these things as the market, in the past, as the market is closed, but you can see the number of signals here, right? The idea is to get you comfortable interacting with risk on, risk off, what it means, how to set the wiggles, and then the more times you see this over and over, hopefully you're able to capitalize on it, right? So yeah, we're looking at things in the past because the market's closed, but that's really what this, this webinar is about. Is
he wants you to open a live room, Jamie.
Oh, well, man, Bill, you know what? That's been tossed around a lot between myself, Steve, Andy, even Sean. So I take that as a compliment. Thank you very much. Who knows? That might be coming down the pipe. That's a large thing to tackle because I'm sure Barry can attest to this. Boy, at the end of the day, you feel like you've been digging ditches, right? I mean, you're mentally and physically exhausted.
It's a grind.
It is. And I mean, it reminds me of the old days, Steve, when, we were just fast and furious the whole day. Boy, by the time the day ended, all you wanted to do is go home and lay on the couch and collect your energy. So, everybody out there knows exactly what I'm talking about. Just because we sit in chairs all day and punch buttons doesn't mean it's not taxing. I mean,
it's like flying a final approach in an instrument jet, 6.5 hours.
Yeah,
It
yeah, yeah,
can
yeah.
be. It can be if you have that type of style, of course. Back in the day, I don't do that anymore.
Well, and of course you're burning that glucose up because your brain's very, very active all day. Um, anyway, enough waxing about how tiring a trading room is. But I guess I could say as brokerage plus becomes more of a thing, and what I mean by that is when it comes out of beta, and especially might as well kind of address this topic now would be a good time. Here we are in October. We got November and we got December, and then this year it's in the books, right? Maybe you've heard Dan allude to this if you've been listening to the podcast. But by the end of the year, one of the largest requests that we've been getting is going to be fulfilled and delivered to everybody, and that is the fact that Holly signals will be automated, or you have the option to automate them. So as you can imagine, we're going to have a lot of questions. We're going to have a lot more Brokerage Plus users. We're going to have a lot of people automating those signals, right? A guy on Twitter today asked me, he's like, man, this is really exciting, but when everybody is scurrying for these Holly positions, what if some people don't get filled? I'm like, well, that's just the nature of the market. What that's going to be dependent on is your mentality as a trader, as far as how aggressive are you? I doubt anybody. Well, I can't say no one will, but sure, some people will run market orders. They're aggressive, right? Some people will run limit orders because we all know that some of these big winners, sometimes they go right off the bat. Other times they pull back.
Some
Sometimes you can
people
get a
will
better
chase it,
price.
and then it'll pull back, and then it'll pull back in 10 minutes, and you get a better price. And that happens all the time, even these days.
Yep.
One of my bigger fears, not fears, one of my bigger questions back early in the day when we had just the Holly, the first segment, was, yeah, how are we going to get everybody filled in these? And then the 3 segments came. As I understand it, we could have a few more pretty quickly if we needed to. There's probably not going to be too many shortages of AI calls. So I have confidence that this platform of AI and the way it's structured will be able to grow and be scalable.
Absolutely, and it's we're all going to find out. We've all got front row seats. So yeah, obviously the ones that just rocket up, yeah, unless you want to chase something. What do we used to call that in the old days, Steve? I got filled at next level. Back when levels were meaningful,
Fractions,
like
yeah.
eighths and quarters or whatever. I got fanneled. Well, modern day fanneling will just be, hey, the signal came out at 50. Damn, I put a market order out, I got filled at 50-50 or even 51, right? So it's just going to depend on, your mentality. There's, think about this, think about order layering. I'll send one with a delta plus 10 cents. So whatever the signal price is, I'll bump the bid up 10 cents, either get it or I don't. Cross up the 2-cent spread or whatever. Maybe I'll throw out a delta plus 10 and then I'll throw out another order with a delta minus 5. So I'll stagger my orders. In case it pulls back, I get a fill. If I get it quick enough, I get the fill in the first order. So there's a lot of different ways that the violin can be played in that capacity, right? And as we gain experience with it and everybody else does, there's going to be whole new generations of content formed out of these interactions with the Holly modules when people do start interacting with them. It's a very exciting time. And that brings up another good point. How many trades today? 43, 52 signals. Now, 52 choice signals out of, and I always just like to do this real quick, add the filter, take me to my show me, just so we can look at the histogram. Okay. Out of 7,189 stocks that we were watching today, these are 52 high probability signals that generated this, right? What a great place to be, right? If the market is just a bunch of parties, where most of the time when you go into the party room, there's nobody there. That's a stock trading average volume, nothing's going on. But see, all these parties, we just went to the 52 hottest parties, right? Some of them, most of them were really good, had a great time. Of course, some of the parties, we drank too much and got sick. These are the losers down here, right? But for the most part, It's where are you going to go to get the movement that you think is most likely to happen, right? And that's some of the trials and tribulations that we old dude traders have been through in the past. Well, when your stock is moving, because we all used to trade 1, 2, 3 stocks, bread and butter stocks. Well, when your stocks are moving, yay, it's great. But when those stocks wouldn't move, you just sit there and grind yourself up because they wouldn't do anything. Well, no need to do that anymore. We're always going to be going to the best 50, 100, depending on the day, 80, 90, the best places out of over 7,000. We're only going to be in a small
That was
percentage of
always
them.
a big argument with futures traders and commodity traders, and you'd say, well, your markets are great and they're open a lot and you can get good margin and good fills, but there's not always something happening in the S&P pit or the live cattle pit. But in the stock market, like Jamie says, there's 8,000 opportunities every day. Well, that in and of itself is not a value proposition, but the value proposition is taking trade ideas to sift through those, and now all the way down to the AI, the incredible amount of sifting and sorting and finding the opportunities. So Jamie's right. Every day there are a plethora of opportunities. You're not waiting for your old standby to wake up and do something. So there's good arguments back and forth, but that's always been the best one between equities and futures.
Yeah, it'd be like you're out in the middle of nowhere. You have no idea where you are. You're lost in your car, and you're just like, well, I'm just going to keep driving because I know I'll get to a town soon, and it'll be great. I have a lot of fun there, or whatever, right? This is your Google Maps for the market, right? This is showing you, okay, these are the best odds. You want to go here? Here you go. You want to go long? You want to go short? Automation's coming. Things are going to change, ladies and gentlemen. Things are going to change. I think we might actually. Well, I'm not. I'm going to stop right there because I'm just going to keep going and going on that, and we've only got a few minutes left here to talk about a few other things. But
well, real quickly, Peter, you can designate. You don't have to trade everything that comes out. You can designate the cap, the limits. You only want to trade stocks under 20. You only want to do no more than 20 trades a day, and then the next iteration. I mean, we're having enough fun, patting ourselves on the back that we got this one to a beta production version, which means you guys will have it soon, the ability to see all three at once. What's next, and we've already seen it, is Dave, our secret mad scientist, is now being able to plug in share size or value. If you want to apply $1,000 for every trade and you want to trade only 20 trades, at the end of the day, the risk on, risk off is not going to show you dollars and cents. It's going to pair up and calculate what your own personal input would be and give you a specific output of what you might expect on a day like today. So, don't think that you just have to turn it on and let it go hog wild. You're still going to have some of your own risk parameters in there as well, price levels, trade count, things like that.
right, and of course, commission is always going to be a big factor. Whether you're paying 50 cents per 100 shares on a per share commission basis, or whether you're getting tagged for $5 a share, or excuse me, $5 a trade, regardless of share size. So obviously, the lower the commissions, the better it's going to be. As far as slippage goes, just depends on what type of stock it was, and were you placing limit orders, market orders. So there's a lot yet to be uncovered when trading Holly. Other than manual right now, we have no idea because we haven't given anybody permission. We're about to do some in-house testing ourselves for automation. But just keep in mind, the reason that we're doing automation is to take full advantage of the statistical house odds, right? The more positions you're in, the better chance you have of acquiring or emulating the performance. What was I going to talk about here? There was something very interesting on the same vein here. Right. Sometimes you get a better price than Holly on a pullback, Phil. So a lot of things that we can't necessarily see in the reports right now. And as we start engaging in those activities ourselves, we'll be sharing data. So stay tuned on that. Okay, so Holly still in the spotlight today. Once again, the ability to spawn all the Holly modules and not only the strategy panels, but the all trades blotters as well. Do it yourself or click on the AI Omni channel as I just did to get over there to the new channel that Brad just put together. Now, very exciting. Holly kicking butt today. New toys coming in the future with automation and whatnot. But let's go back to just a little bit of bread and butter here, because nothing like your bread and butter. And a couple of windows that we haven't talked about in a long time are starting to light back up. My downside tickers, my turbo breaks down. But these guys, the pack losers and the turbo down no support, because typically we're always, when we have an up day, we got a lot of nice runners. Heck, even, let's see here. Let me get back into 15-minute candles here. Of course, some things even going up today. Of course, the finish, we're down, but finished up. So this guy was very active today, as he always is, just not a lot of good timing on the entries. But then let's look at its evil twin here, where this is turbo up and no resistance. We've got turbo down, no support, right? Of course, look what's coming through on the bigger cap side, Steve. No surprise there. Snap, crackle, plop. But a lot more of these guys are starting to come through, even though, we're taking a healthy pullback in the market, but these guys are through their, evident, obvious support levels, right? Snap is at all-time lows. So, he's been just collapsing ever since it broke this plane right here. But these setups are becoming more and more prevalent, even though the market is still marching on to highs. So I'll throw this top list in the chat area here. Of course, it's always accessible, just like all of mine and Steve and Andy's favorite windows, through channel 4, just right down here. But, BEDU, look, it just broke out of this area not too long ago. And you've always got new stocks popping in and out of here. Evidently, you want to catch them just as they're breaking. But, this list looking full compared to what it's looked like in the past. There's hardly anything on here. Oprah, not Oprah Winfrey, she hasn't gone public yet, but this is the alternative browser that maybe some of you have used in the past, right? They went public not too long ago. Well, guess what? Looking pretty sick, right? Didn't close above this line today. Might be one to keep an eye on moving forward, because if you find yourself a nice little cuddly entry on a breakdown tomorrow, well, then there's no telling where Oprah might want to go from here. By the way, could have something to do with the fact that it's being widely dispersed now. Of course, the news was always there. They're owned by the Chinese, right? So I don't really think anybody here would want to be using a browser that is owned by the Chinese for obvious reasons. So as you go through this list, you'll be able to spot the new ones that come out, but what you want is to picture what they could look like. And these are perfect follow-throughs here. And the fact that, I don't know, there's just a lot more than I thought there would be at this time in the market. So maybe the junk is already junking on the low side or the downside behind the scenes. So just to make sure, I'll go ahead and drop this cloud link in there. Where is my chat? There it is. And we're just about out of time here, so let me get this one in there, along with the turbo down family, no support. And also, too, these breakdowns, guys, they're right out of the textbook that myself, Steve, Andy, and Sean put together. Wow, seems like a long time ago now. But if you haven't done so already, check out the ebook, trade-ideas.com/ebook. You can download it. It's free. So a lot of these breakdowns are right out of that book from my little segment. So if you haven't done it, get it. It's always good to have that information and not need it versus need it and not have it when the time is right. Also, you'll get some other additional setups from Steve and Andy and Sean for the downside. All right, ladies and gentlemen, both of those windows are in there for your downside pleasure. We're just about out of time here. So Scott, if you're ready to walk us out, we're ready for you.
All right. Thank you. Couple items on the way out. We have an event fast approaching that's got great speakers. It's going to have some interesting panels. 3 of the highlight speakers are Brian Shannon, Brett Steinberger, JC Parrots. You can read about them on trade-ideas.com/livestream and sign up to get information on how to watch it live. We already have a sold-out show here in San Diego for the people who are going to be here in person to participate. But we can accommodate thousands and thousands on the live stream, so feel free to sign up. It's free. Trade-ideas.com/livestream. It's going to be a good day, and in addition to being able to watch it live, being on that list is going to get you early access to all the videos once they're produced and available online. So don't miss that. It's going to be very interesting. We have an ebook out that's timely. Both Jamie and Steve contributed chapters. It's 5 ways to win in a post-BTFD market, which we've certainly experienced since February this year. Trade-ideas.com/ebook. Just go there, put in your email address, and you get the download link delivered to your inbox. There is a podcast we put out every week. Just search for Trade Ideas Podcast wherever you listen to podcasts. Make sure that you add us as a subscription, and then you get all the new ones. You can cruise through some of the archives, too. We've got some guest spots on there that are pretty good. Good interviews and stuff. There's also a code, Save in October, all caps, saves 15% off your first month or year of Trade Ideas. You can also, next slide there so you can see it too. Yeah, Save in October, just save in 15% off your first month or year of Trade Ideas, standard subscribers. You can also use this to do an upgrade, so take advantage of that before the end of the month. Any questions, send an email to info@trade-ideas.com. Jamie is on Twitter, @QuantBot. Steve Gomez is @TodayTrader, and on Facebook, Trade Ideas is facebook.com/TradeIdeasPro. If you like that page, you can share the stuff we post with your friends. Thanks everyone for attending. Thanks, Steve and Jamie. We'll get the recording up later on.
Hey, thanks everybody for popping in. Thank you, Steve and Scott, and we'll see you tomorrow. Bye-bye.